Okay. All right. Hello, everybody. Appreciate you being here. And we're looking forward to our discussion today with Terry from the American Endowment Foundation. And she's going to talk about all things charity in terms of the trends in charitable giving, go through donor advised funds, some different things to consider there. So just FYI, we'll send out a Survey Monkey after this. And if you have any ideas for future webinars, we appreciate you letting us know what those are. Also note, on July 25th, we will be hosting a webinar and inviting the executive at the University of Wisconsin that's in charge of the Senior Guest Auditor Program, which basically allows individuals, I want to say over the age of 60, to take basically any UW class they want. So they're going to go through and help you understand the process in that and how to do that, what classes are available. And that's been something that a few of our clients have talked about and really enjoyed. And it's not something that I think everybody knows that is available. So we wanted to have a guest speaker talk about that. So again, that's on July 25th. And without further ado, I am going to turn it over to Terry. And Terry, appreciate you being here today.
Well, thank you very much, John and Kevin. I really appreciate being invited to be a guest speaker for your clients and have a little conversation about donor advised funds. So give me one moment, please. I am going to share my screen and launch a presentation because I think sometimes a little visual makes it easier for people to follow a story. So one moment while I get this teed up. Okay. So we're going to talk about all things charitable, but really the focus of our conversation this afternoon will be donor advised funds. And I like to refer to these as modern charitable accounts. So our agenda quickly will be trends in charitable giving, donor advised fund basics, and then next steps. So trends in charitable giving, we'll kick it off here. And I was absolutely amazed by this very first statistic, $484.85 billion given by Americans to charity in 2021. And this comes from the Giving USA 2022 report. This organization has been tracking this for decades. Americans are very generous, extremely generous folks. And when you look at the breakdown for how this money came to charities, 67% of these dollars were donated, given away by individuals and families. 19% of charitable giving came from foundations, 9% from bequests, and 4% from corporations. So it's a really phenomenal number. I don't know about you, but I don't have that much in my bank and investment accounts, and it's just almost hard to wrap your head around it. Now, there are many types of charitable giving instruments that advisors like John and Kevin utilize with their clients and their families and individuals. And these include things like charitable remainder trusts, charitable lead trusts, gift annuities, pooled income funds, private foundations, and donor advised funds. There is no one-size-fits-all solution for your philanthropy and for what you and your family are trying to achieve. So right up front, I say, have a conversation with the Capital Group. Let them get to understand what your goals are, and they, as your advisors, plus your tax and legal advisors, will come together and offer the right solution for you. Now, that being said, donor advised funds have been growing in popularity for the last 30 years, and that's what the focus of our conversation will be today. So again, trends in charitable giving, and these statistics actually come from our friends at the Internal Revenue Service. But based on 2018 publicly available information, donor advised funds today outpace private foundations 10-1. And I actually saw a statistic in the last couple of weeks that that number may have grown 15-1. So while private foundations were very popular decades ago, there are many reasons why families and individuals are making the change to donor advised funds. So some of these statistics are interesting. Donor advised fund accounts are approaching 1.3 million. 1.3 million individuals and families have opened this type of charitable giving vehicle. And based on some statistics from National Philanthropic Trust, the average donor advised fund size is $182,842, and contributions in 2022 reached $72.67 billion. So remember my previous number, close to $485 billion given away to charities. $72.67 billion was used to fund donor advised funds. And if I use the word DAF, that's the acronym that's a little easier for me to roll off my tongue. That's a 53.2 increase over the prior year, and that's higher than the compound annual growth of DAF assets, 28.3% from the 5-year period 2017 to 2021. So you can just see the numbers are really, really growing with donor advised funds. Now, the idea of a donor advised fund is to be able to give to charities. Grants from DAFs reached $45 billion in 2022, and that's a new record high with an average payout rate of 27.3%. Now that's a lot of stats and that's a lot of information. So let's start with a very basic, what is a donor advised fund? And what it is, it's a charitable investment account that provides a simple and efficient way to manage your charitable giving. And you and your family can enjoy maximum tax advantage, make grants on your timetable, and build your charitable fund to increase your philanthropic funds for grant making in the future. So how do these donor advised funds work? Let's just talk about the basics. Donor advised funds work like a charitable savings account. So individuals or families can donate a wide variety of assets and receive a current income tax deduction, avoid capital gains on appreciated assets when sold, and avoid income tax on the appreciation of invested assets inside of this charitable savings account, meaning you're growing the funds that are available for philanthropic purposes. So what types of donations do people make to donor advised funds? Well, I always like to say the bulk of the donations in any given year are things like cash and Apple stock. In other words, cash, stocks, bonds, mutual funds, publicly traded securities, that represents the bulk of what people use to open one of these funds. But there are other illiquid assets that can be donated. And those include things like closely held shares of privately owned businesses, real estate and land. You wouldn't think you could give land to a charitable account, but you can. And when that land, whether it's, raw land, timberland, an apartment complex, a vacation home in northern Wisconsin, which a lot of people have vacation homes in northern Wisconsin, private equity, cryptocurrency, commodities, that represents about 10% of gifts that are made in any given year. So what I've learned in my role and what financial advisors that I work with have learned, a lot of people don't realize that that second home could turn into a very valuable property to use to convert to charitable dollars. Now, a little more about donor advised fund basics. What's the legal structure? They are established under Internal Revenue Service Code, and these are individual accounts that are held or maintained by a public charity, a 50C3 foundation that acts as the sponsor of the donor advice fund. And what they do is provide a lot of flexibility because the donor, the family, or a committee can recommend or advise the charity on grant making. And this allows individuals and their advisors to separate the tax planning aspects of giving from the philanthropic aspects. And again, this is where you want to get the capital group and your other trusted advisors involved to determine not only is this the right solution for you, but what are the proper assets to consider donating? And I know that Kevin and John will certainly weigh in on that. Some of the advantages to the donor with a donor advised fund, they're very simple and flexible, and they create a legacy of giving. You can establish the donor advised fund today. I'll just say Mr. and Mrs. Smith may open a donor advised fund, are the donor advisors. And if they have children, they can name their children to be their successor donor advisors. So these donor advised funds can actually go on generationally. There's no end to it. Now, that's one option. Not all donors have family members that will want to continue a DAF, but there's a lot of flexibility about other choices that can be made after the donors have passed. So again, successor advisor, having the fund pay out to named charities, having the fund continue to support favorite charities over the years, as long as there is money in the account to do so, or even allowing a board of directors, for example, at American Endowment Foundation, to help guide those decisions based on past grant-making history. Now, donors are always curious, well, if I make this donation to this charitable fund, what do I get in return? Well, first of all, you're going to get a tax receipt for the value of the assets that you donate. So if you donate really anything, whether it's cash, whether it's Microsoft stock, whether it's an appreciated mutual fund, whether it's real estate, whether it's closely held shares of a business, you will get a tax receipt for the value of your donation. And that tax receipt is something you give to your tax advisor, and they will use that as a deduction against your taxes. And I'm not going to get into the weeds because everybody's tax situation is different. So again, your advisor team will help you identify the proper assets to donate, and then the tax advisor or the CPA will weigh in on how to apply that against your income tax. So you get a tax receipt, but the other thing you retain is the ability in the future to make grants to any IRS qualified charity that you choose to support. So the Boys and Girls Club, the American Red Cross, those are 501c3 public charities that are recognized by the Internal Revenue Service. Those qualify as prospective grant recipients. You can also make a grant to any religious organization, any educational institution, healthcare organizations, your public library. Again, it's a very extensive list. What you can't do where it comes to grants is to recommend a grant to any organization for which you will receive a personal benefit. What do I mean by that? Hey, if you want to make a donation to any of the charities I mentioned and they want to give you a keychain or a coffee cup as a thank you, that's a de minimis. It has really no value as far as getting something back. That's permitted, but you can't use the donor advised fund to pay your child's tuition at the University of Wisconsin, Madison, or Whitewater. You can't make a donation to the annual fundraiser at the local community foundation for a table of 10 and invite 8 of your good friends to join, because you're getting a value that's greater than a coffee cup or a keychain. So again, as long as you're not receiving personal benefit and it's an IRS qualified charity, you are free to make those grants recommendations to the charities you choose to support. Again, for many, many years. I like this graphic. It really pulls together how the pieces work with giving, growing, and granting. So again, you give to your fund and you get a current tax deduction. You grow your charitable assets. Advisors, the capital group, they will invest that money on the behalf of the donor advised fund sponsor and grow that money over time. So, it's an unbundled approach. They're handling the investments, and then you get the pleasure and the joy of granting charitable dollars to those charities you want to support. I'm with the American Endowment Foundation. My name is Terry. I'm part of our Office of Business Development. Just a little bit of who we are at AEF. We are one of the country's largest independent donor advised fund programs, and this is our 30th anniversary this year. We were founded in 1993. Again, we're the largest independent donor advised fund program. What I mean by that is we don't have mutual funds. We don't have investment pools. We are truly an administrator of the donor advised fund program, and we partner with financial advisors to support the donors and their families when they choose to give away wealth to set up a charitable giving account. We are a 501c3 public charity, and that's what happens when you make that grant. You make an irrevocable donation to our foundation. We in turn issue a tax receipt letter to you. And again, your CPA or tax advisor will know how to apply that gift against your tax return. We've grown immensely. This slide's already out of date. We are $6.4 billion in assets under administration, and that represents 14,000 individual donor advised funds, each of which have a financial advisor like Kevin or John manage that money on behalf of that fund. One of the other things we feel sets us aside from other options in the marketplace is our dedicated personal support for our donors, for the families and individuals that have set up these funds. We have a team of individuals who are here to assist with questions as you have them, or perhaps provide some support if you need assistance making a grant request. And with that, I will be very happy to open up for questions.
I appreciate that, Terry. And one of the things that I'm going to do is I would be remiss if I don't do our disclosure slide. So I believe you are seeing that now. And as long as you have 5 seconds to read that, that is all I'm required to do. But as we kind of finish up here with a Q&A, I mean, one of the things, Terry, that might be helpful to know about donor advised funds, can you talk about like minimum donations, things that how much do I have to give when I'm ready to give to my charity or church, or can I make a monthly contribution directly from my bank into donor advised funds? Can you talk a little bit about how those types of contributions and distributions work?
Absolutely, John. Now, my remarks will be limited to American Endowment Foundation. Sure. So to open a donor advised fund, our minimum new account contribution is $25,000. Additional contributions can be made at any time for at least $1,000. Okay. As far as grants are concerned, again, you can make a grant to any charity you choose to support, as long as they're in good standing with our friends at the Internal Revenue Service. The minimum grant that we process is $250. Now, a couple things about grants, and thank you for asking me that question. Donors, when they want a grant sent to their church or a university or any charity that they want those monies to go to, can either receive recognition for that grant that's made, or they can make them anonymously. And so on a pick and choose basis, you know, the family, the donor may choose to get recognition or stay anonymous. And sometimes people choose to stay anonymous. You may want to make a donation to the local community foundation for some fundraising initiative they have there, you know, in the Madison area, but perhaps you don't want their business development officers reaching out to see if you have more that you want to give. Did I answer your question fully,
You
John?
did, yes. I
Thank
appreciate
you.
that. In fact, I'm gonna stop the recording right now. And if you do have a question, feel free to raise your hand. We can unmute your line.